Good morning, ladies and gentlemen, and welcome to the ECSC Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And now I'd like to hand you over to Executive Chairman Ian Mann. Good morning, sir.
Morning, Jake. Thank you for the introduction. So welcome everybody to this presentation. Firstly, apologies that we didn't do this slightly quicker following our results last week. We had a very busy week meeting with existing and new investors. And this was the first time that it was appropriate that we could schedule it in calendars. So I have the pleasure of introducing Matthew as our new CEO. So I'll be taking you through the rationale behind bringing Matthew in, and Matthew will then introduce himself and his background. Then we're going to talk about some of the challenges we had in H1 and what we did to fix those, and the up-to-date metrics on trading which show how those were fixed. And then we'll talk a little bit about what we do and who we do it for. And then I'll hand back over to Matthew to talk about what he's doing in terms of moving the business forward, and we'll finish on the latest published forecasts. As usual, we'll try and answer questions if we can as we go along, depending on if they fit in that part of the presentation. So following the obligatory disclaimer, so I'm now taken on the role of Executive Chairman. We've done a lot of work in COVID to review with external coaches and consultants the performance of the senior management team, my role as CEO, with really the brief of what does the business need for its next stage of growth and moving the business forward. And with a particular question of, is the founder and a subject specialist in terms of myself, the right person to lead the company from a business point of view and execution of strategy. And I came to the conclusion that I wasn't necessarily the best person to do that, as long as I could find a suitable candidate. And I happened to catch up with Matthew that we've known previously, and I'll let Matthew talk about our background. And invited Matthew to get involved, and he got involved on a consultancy basis and then took on the role of CEO. So I'll talk a little bit about how we split the roles, but I'll let Matthew introduce himself and his background first.
Okay, thanks, Ian. Good morning, everybody. So you can see there some of the brands, some of the organisations I've worked with over the years. So quite an eclectic mix. So I've operated at C-level probably for the last 20 or so years, largely from a wide range of FTSE 100 down to pre-revenue startup and everything in between. So, as I say, quite an eclectic mix. I've largely operated, if there were some key themes, I've largely operated in sort of professional services, regulated environments, and regulated organisations. I have just seen a question come in. I will take it now. So there's a question come in as to why I joined the company. So in one of my previous roles, I was actually a client of ECSC and had the unfortunate situation of suffering a ransomware attack, which was very impactful. But I will say, of all the advisors that were advising me and helping me navigate through that particular situation, the organisation that stood out in terms of being the most pragmatic, the most calm, the most expert were ECSC, and without ECSC's intervention, I would have expected the situation to be a lot worse. It was pretty bad as it was, but nevertheless, as I say, ECSC did a sterling job. So that's where I came across first-hand experience of ECSC, which was one of the key reasons why Ian and I then had a further conversation, and then I subsequently joined.
Okay, thank you, Matthew. So in terms of how we've split the roles, so I've taken on chairing the board. I've made it very clear in announcements that that's a temporary situation. and we will be strengthening the non-exec side of the board probably in the middle of next year. So my full-time role and role moving forward is much more building on my experience and delivery to clients and cybersecurity background, with particular emphasis on service innovation, and also my role in terms of events and media, and that side of things. And then Matthew, I'll let Matthew explain his side of things.
Yeah, so I suppose ultimately I'm responsible for the direction of the business, defining, executing strategy, making sure that we are staying relevant as an organisation in terms of what we do, how we do it, who we do it for. Also making sure, again, pretty basic business leadership requirements is making sure we've got the right people in the right seats, facing the right direction, pulling in the same way. So that's a big part of it. And then clearly the environment we work in, the culture in which we operate, engaging, energizing, performance-led execution is all key components of a culture that we want to enhance and boost across the organisation.
And it's worth saying that Matthew has complete autonomy in terms of development and enhancement to the senior leadership team. So we've been very clear of where my role is and isn't in that regard. Rod just asked a question about capacity, which I'm going to answer on the next slide, and also a question about the partner program, which Matthew's going to talk about later on. So we had some challenges in H1 which we've solved, and these are captured on these first two slides. So I'm going to go through these because these were really pre-Matthew joining. Although he's only been here a few months, he's having a very positive impact, and therefore I'm sure there's some contribution to current trading already. But we had problems in H1, and it's split into two areas. At the start of H1, we had some delivery capacity issues. So we'd lost a few staff, and it wasn't just about capacity, it was also about the right service mix. So we had some issues with delivery, which isn't normal for us. But those have now all been resolved. So now we have the right number of people, the capacity we need for current trading, and we've got some new starters coming in as well for where we can see needing capacity in the near future. So the capacity issues were solved. We then had some issues. They were really in the first couple of months. Then in the next couple of months, we had issues around sales resource. So we'd reorganised sales and the way that worked, but we'd lost a couple of people. And we really had some bottlenecks, particularly around winning new business. And we couldn't carry out the marketing that we wanted to. We just didn't have the capacity in sales to deal with that. That has been resolved, and we've added a little bit extra as well. So both the capacity issues have been resolved, and we're very happy with the new people that we got in those roles. We did implement price increases last year and again this year, and we executed cost reductions. So the cash burn we saw in the first half of the year is now finished, and we're now in a positive cash position on current trading. And the best two measures of the changes we've made are the two figures for both managed services and assurance. So in terms of assurance and the consultancy side of the business, our level of bookings in the middle of September was 30% up on the mid-month average for the whole year to date. And that level of bookings has continued into October. So October, September, approximately 30% up on the rest of the year. And then our managed services, the pipeline had really diminished through COVID. That's now recovered. That's now in excess of pre-COVID levels. And the new managed service wins have come through to a level that the order book at the end of June was 30% up on what it was at the end of December. So they're both in a very healthy state.
Can I just touch on that, Ian? So in terms of MDR, we also have, we're expected to land 5 new MDR clients this side of Christmas. With an aggregate contract value of just short of £1 million. We have 2 expecting to come in this month in October. So as I say, 5 additional MDR clients coming in, hopefully before the end of the year.
So just to answer Reg's first question in terms of we're fine on capacity now, and we've got the appropriate level of human resources. Hardware and software, yes, we're fine on those, although we have done a recent strategic partnership on the on technology side, and I'll be coming to that. Roger also asked a follow-on question about cash burn. So the cash burn in H1 has now been corrected, and in terms of current trading, we're cash positive. So we've gone through the dip and we're coming out the other side of that. So we've gathered some stats to update you on the current market position. So you can see here statistics for the UK total market size, market growth, and number of businesses that report cybersecurity as a very high priority for senior management. I think when we combine these two and compile these to update you, the one that on here that really stuck out for me is really the bottom two. So although cybersecurity is very big and growing very quickly, only just over half of businesses have actually identified where their risks lie, and less than half of businesses have actually got any external expertise to help and guide them. And I think those two are interconnected. And that shows why you're still seeing lots of cybersecurity breaches. So although it's recognised that it's very important, there's a lot of businesses, so about half the businesses in the UK have not yet addressed it properly. If you're not getting external expertise and you haven't identified where your risks are, then you can't really be appropriately addressing security, and that's why people have breaches. And then this slide shows some further stats in terms of cost of breaches, times it takes for breaches to be identified, and businesses that have suffered ransomware and the sort of costs. So I'll leave you to sort of absorb those from the slide deck, but it shows that we've got a very strong market, and we've got a slide later on about how potentially recession-proof this market is as well. So you can see on this slide some of the recent headline breaches. So breaches in large organisations are still getting a lot of attention in the press. So you can see 3 major breaches with well-known brands in the last month. But importantly, if you look above, you can also see that breaches are happening across all sizes of businesses. So one of the reasons some organisations don't address cybersecurity is that they have this belief that it only happens to large organisations, fueled by it's only the large organisations that they hear about in the media. But you can see from the above that it happens to all businesses of all sizes and all sectors. So I'll outline what we do then in terms of cybersecurity. So it's 3 main areas, and it's delivered from the 2 divisions. So Assurance Division is really a consultancy led service which helps protect people from breaches and helps stop the breaches before they happen. And this is advising senior managers on where their risks are and uncovering those vulnerabilities, and helping people improve security, and where appropriate, helping them gain certification. So depending on the sector, there are various industry standard certifications that organisations can achieve to demonstrate good security to their wider stakeholders. So where appropriate, we help people gain those certificates, but also helping them uncover vulnerabilities. And that can be through testing, where the tester is behaving more like a hacker and trying to hack into systems and reporting what they've done and how to fix it. Or it can be working with the organisation to review what they do and how they manage their systems and uncover weaknesses. And all of that flows up to effective reporting to senior managers for their current state of security and how they can improve that. Then you move on to the MDR side of the business, Managed Detection and Response. So we have 2 security operations centres, one in the UK and one in Brisbane, Australia. And that's to allow us to detect on a 24/7 basis without having to get people working on night shifts, and trying to attract the talent in the current employment marketplace with the offer of working nights is not a very good proposition, not very good for staff retention. So the fact that we've got facilities in the UK and Australia allows us to work more normal shifts, still 7 days a week, but allows us to cover the 24/7. And what we're doing there is is managing systems that help detect breaches, and that can then lead into incident response. So we're looking at what's happening on people's networks, but also finding what are the latest threats. So, for example, on Friday, there was a major new vulnerability which didn't really hit the press. So the press reported a month ago that there were some new vulnerabilities around Apple devices. That got into the press. But on Friday, there was an equally serious vulnerability that affects the most widespread email server deployed in the world. So at that point, we are advising clients, this is a new vulnerability, this is what you need to do to address it. But equally, we were looking at what would an attack look like and checking that nobody was currently being attacked, but also going back and saying, this has now come to light. Has anybody been attacked in this using these techniques in the last few months? Because the attackers may have been using this technique prior to it becoming known. So we're continually looking at where are the weaknesses in client systems, where are attacks coming from, and is there any sign that that client has either got the weaknesses that could be exploited by hackers or has already been exploited. And what we're trying to do there is catch a breach between the hacker first gaining access and the point where it can escalate into either data theft or ransomware. And on average, you've got about 2 weeks. So it can be a lot shorter. We've seen as short as 4 hours, and it can be as long as 3 years. That's the longest we've seen. But on average, you've got a couple of weeks from the hackers spotting a mistake, the hackers exploiting that, gaining access, and you've got a couple of weeks of the hacker doing different things prior to the ransomware being deployed. And if we can detect it in that period, we can stop the hacker in their tracks and avoid it becoming a damaging breach. For clients where there is a breach, and this isn't just clients that have used our other services, but clients will call us out of the blue. So in Matthew's case, we'd done some work for part of the group that Matthew was involved with, but not directly the part that had the breach. So clients will call us even if they're not an existing client. And then in effect, we're an emergency service. And that can be a technical response over the phone. It can be deploying a team on site and helping manage the recovery. And also it can be helping management with breach communications and breach management and wider stakeholders. So it's really a full service for what you need to respond in the case of a breach. So everything cybersecurity related, stopping the breaches, detecting them, and then responding appropriately if they happen. And when we sit down with individual investors, we do show clients that we work with, but we don't make that information public. So in the last 2 years, we've serviced more than 450 organizations, and those are descriptions of just a very small sample there. So one of the things that I'm now focusing more on is our technologies and our security partnerships. And we've done an extensive piece of work this year on the managed detection and response, and particularly looking at the mix of where we use external technologies, either vendor technologies or open source, and where we use our own technologies. And we are moving further away from developing our own, because the reasons for developing our own were primarily gaps in existing technologies. And now there are organizations putting significant investment into detection technologies, for example. And we have just signed and released an RNS recently on our collaboration with Securonics to be a UK cybersecurity operations centre for their technologies. And this allows us to integrate their technologies into our offering. It allows our clients to buy those technologies at a significant discount compared with buying them directly themselves. And integrates nicely with what we do as well. And we've got some distinctive ways of deploying this, which build on our incident response capability as well. So there are other partnerships that we're engaged with that don't necessarily need formal agreements and other technology adoptions, but this is a reason for, or one of the examples of new technology partnerships. So I'll hand over then to Matthew for the way forward.
Good. Thanks, Ian. So clearly I'm still a little bit of the new kid on the block, been in position for just over a couple of months now, but I'm pretty adept in in taking in getting a good handle on an organisation in fairly short order. So these are some of the things that I've identified and are being worked on as we speak. At top of the bill is really sort of our refreshed culture and a slight change in how we do things. It was very clear to me that far too many roads led to Ian from the leadership team. So Ian was far too involved in a lot of the day-to-day activity of the business, which had a knock-on effect in terms of the leadership team being empowered and energized to do their own thing in as much as what they thought was the right thing to do, but working collaboratively as a leadership team. There was too much dependency on Ian. And then that also had a knock-on effect that Ian was unable to sort of look into the market, see what's going on out there from our customers, our clients, the market changes, the competitor landscape, etc., which means that we were far too much inward looking and not really seeing where the business needed to be now, next, and future. That's already changed, and as you see, what you've heard from Ian already is some of the things it's now able to do allows us to make sure that we are staying relevant, and which will underpin our strategy. So we are going through that change, and clearly everybody's aware that culture doesn't change overnight, but we are very much committed to creating a culture that is more empowered, more autonomous, more performance-led, more commercial. And as it stands today, the leadership team are very much embracing that new way of working. And as I said, the byproduct of that is allowing Ian to be focused on the areas that he adds maximum value in doing. Clearly, Ian and I have had some fairly candid conversations over this last period of time, and as Ian alluded to at the top of this presentation, he very much is allowing me to do what is required, what I think is the right thing to do with the business, despite the fact that we are sort of unwinding and unpicking some of the things that have been put in previously, if we think it's the right thing to do. You can see there that we're also introducing improved KPIs and targets, and this is really around creating more accountability and sort of accuracy around what is expected of our key people and everybody across the organisation, for that matter of fact. I'm not saying for a minute that KPIs weren't in the organisation; they were, but certainly what I've identified are some gaps, and I suppose a deeper level of measurements across the organisation and with the people. What I'm keen on making sure that we achieve is that everybody is crystal clear about what's expected of them, what good looks like, and how they can then perform against those expectations. We are going through the process as we speak of co-creating our business strategy. It's a session that we will be having over a couple of days, and that then will create our go forward plan, if you like, and value creation plan as to the key things we need to deliver over this next period of time to make sure that we hit our growth numbers. I mentioned before about our lack of sort of outward facing analysis as to what's going on out there. It's not just Ian's responsibility to do that. We all need to do that. I've got a big part to play in that as well, in terms of making sure that I'm out in the market, raising brand awareness, understanding who we should be speaking to, and making sure we are building and strengthening and deepening those relationships, as I say, now, next, and future. There will be identification. We've already identified a couple of resource gaps and skills gaps in the organisation that will underpin our strategic expectations, and we will, over this next short period of time, look at filling those resource gaps. We are pretty much, as Ian touched on earlier, fully resourced from an operational point of view. That's not where we've got some gaps, but we've probably got some gaps in terms of our sales and commercial delivery capabilities. Regarding the partner strategy, we have had a question previously in terms of our partner program. So our partner program has been operating for many years successfully. That will continue, and our partners, historically, have typically been IT MSPs, managed service providers. So the organisations that provide IT support, help desks, what we call box shifting, so buy hardware, sell software, and they resell our proposition. As I say, we will continue with that. We have somebody owning that particular cohort of partners. But what we've identified is that really ECSC sits mainly more we are a trusted advisor. We are an expert trusted advisor. And certainly from some of my connections, some of my historical roles and organizations I'm very familiar with, we actually, as ECSC, as a brand and as a proposition, fit fair and squarely in that trusted advisor arena. We've already had numerous conversations with potential partners across a number of those trusted advisor verticals that are turning into something quite exciting and very promising. We have a number of very large potential opportunities in that space imminently upon us, and I'm very excited and really positive about where they could lead. As I say, it's a pivot from our traditional partner. We will continue, as I say, to work with those partners, but there is a significant opportunity in actually building a relationship with a new type of partner, really around that, as I say, that trusted advisor space. We're also looking at the sales and marketing operating model. I think the relationship between our sales functions and our marketing functions has probably not been as close as it needs to be. Clearly, that is a symbiotic relationship where I've identified that we need to get more joined up and more cohesive in terms of the work that marketing does. The marketing strategies then lead to the right sales opportunities for our salespeople to act upon and ultimately close and get over the line. And there's been a little bit of a disconnect between those two functions in the organisation. We are now bringing those together, and I'm seeing great synergy and some immediate improvements. Regarding, and you see the final bullet point there regarding our sales hunting, a beauty of our proposition in terms of cybersecurity and cyber risk advisory is that we have mass appeal. We offer a mass appeal product. The downside to what we do is that we have a mass appeal product. So what we need to do is take a far more focused approach in terms of which markets we're going for, what our target audiences are. So we're not all things to all people, although we have a very extensive pedigree and heritage in working across the market and completely agnostic. But going forward, when it comes to our sales strategy and acquisition strategy, we need to take a little bit more focused approach to make sure that we've got tighter campaigns and more defined ways of speaking to prospects and ultimately winning those opportunities. So we are having a slight pivot on our sales approach and our go-to-market strategies.
Just a couple of questions that I'll just pick up there. So Sam has asked the reasons identified for staff leaving in H1. Some of it was in H1, some of it was in Q4 last year. So you'll have heard of the Great Resignation, as it was deemed, of people reevaluating what they wanted to do following COVID. So our staff retention last year was 85%, which is high for our industry and for technology companies, but low for us historically, where we'd have over 90%. However, we have looked at the net result of staff that have left and staff that have joined, and we think we're in a stronger position because of it. One of the weaknesses that Matthew can help us address is, historically, we've had very low staff turnover, a very stable team, particularly in the senior management team, and a very loyal team, loyal to me and me being loyal to them. And that's not necessarily helpful moving forward as the business gets to its next stage of growth. And that's one of the reasons why Matthew has got autonomy in terms of making changes as is necessary to move the business forward. So we don't necessarily see some staff movement as a negative. It can turn out to be more positive, and that's the way we view it from where we are now compared with where we were. Peter's also asked a question about using third-party detection technologies. We have a suite of technologies, some our own and some from third parties, and we'll continue to keep that mix, because different clients need different approaches. So, for example, if a client's moved everything into a certain vendor cloud, then often that vendor has a technology that is the most cost-effective way of detecting breaches in their cloud. And therefore it makes sense for us to manage that on behalf of the client. Another client may not have the budgets to be able to afford a top-tier detection technology, and therefore we've got an offering based more around open source with our own enhancements that can be suitable for that client. We've mentioned Secure Onyx. With Secure Onyx, they're very good at some things, but other things they're not as good at. For example, when it comes to how to use their technologies for extracting information when there's an incident response. So a blend of things that we've got a history of doing and theirs can create the best solution for the client. So it's not a case of stopping our technologies and just adopting one or two vendors. It's not what you'd see with a typical reseller. It's saying we've got lots of experience of development and enhancing technologies, and we build on that, but we recognize that there are certain vendors making such significant investments in technologies that we can't at our size compete with that, and therefore we will embrace it where those technologies have got real merits. In the case of Secure Onyx, they're also in a very commanding position in the market because they're in the Gartner Magic Quadrant, but that wasn't our primary criteria for selection. Our primary criteria was technical capability and value to our clients. So, for example, we've adopted another technology that doesn't feature anywhere in the Magic Quadrant. So it's not that it's in the poor segment; it's just nowhere because they don't play that game of partnering with Gartner. So it's a real mix that we've got there, and whatever we feel will present the best solution to the client.
Can I just go back on one point? And we did have a question on sort of scalability and resourcing and recruiting. We are putting a lot of focus on our employer brand. We already, are in a strong position in terms of how we're perceived in the market by potential and prospecting employees. But that doesn't mean for 1 minute that we become complacent in that regard. In fact, quite the reverse. We are going to enhance and boost our employer brand activities, because we realize that some of the opportunities that we are looking at now, some of the growth opportunities clearly are reliant on employing great talent. We are a service organization, and we're very much dependent on having great people working for the organization. So we will continue to invest in our employer brand and all the activities that make us a destination employer. We've never had any real issues in recruiting great people historically. And we will, as I say, we will not be complacent in that regard and continue to invest in our employer brand, making sure that we continue to be a place that people want to come and work for.
And those shortages of skilled workers in the UK and people struggling to retain and develop cybersecurity expertise in-house widens our opportunity, because if you step back and say, what do we do as a company? We plug the gaps in our clients' cybersecurity expertise. Sometimes resource 24/7, but fundamentally we give them the skills that they can't develop and retain in-house. So the more they're struggling with that, the more they need our services. And as long as we're good at the things Matthew's just described, then we've got a great business model moving forward and a very attractive market position. So we came through the last recession still growing, and there is already speculation, as you can see here, and discussion about is cybersecurity recession proof. In the last recession, it was the only area of IT that continued to grow. So if you take the level of priority it's getting at board level, when people are looking at do we make any reductions in technology spend, it looks very likely that this is the one area that people will try and maintain. So we're optimistic based on our experience of how resilient cybersecurity is in the marketplace. So these are the published forecasts from Allenby for the next year. It predicts or forecasts about a 22% growth in revenue. As you can see from the earlier slides, our two key metrics of managed service order book and level of bookings is already 33% up on the average for the first 8 months of the year. So you can see we're already making great progress in terms of achieving and beating that level of revenue growth. And our current run rate in terms of adjusted EBITDA is already in September and October at about the level that's forecast for next year. So we're already there, hence why we've already seen the turnaround in terms of cash burn and cash becoming positive. I don't know if you've got anything else to say on that, or shall we look at questions?
No, I think, well, what I will add is really just to expand on that point. So we are seeing very positive activity coming through as we speak that are underpinning the numbers you can see in front of you. So everything looks to be, absolutely, turn the corner and seeing some really positive things. So fully on track to deliver the numbers you can see in front of you.
Okay, so that's the end of the formal presentation. We will look at questions, and some we may answer in the written form after the presentation, but we'll have a look and see if any of these that we can answer now. There's one about margins, and Roger was saying about the gross margin going down. I'm assuming that you're looking there at the managed service, the MDR margin, and that was due to the loss of some contracts through COVID and the real significant weakness of the pipeline after COVID. That's now fully recovered, and the order book being 30% above its peak level previously shows that we've addressed that, and therefore those margins will start to recover.
I can take one there. Somebody's asking regarding tactical initiatives versus strategic. So we have a range of things being currently worked on that I would class as tactical, and that's for me what I call business hygiene. That is making sure that people are very clear as to what's expected of them. So making sure that they have appropriate role profiles with KPIs, objectives, time-bound objectives that are co-agreed, and they probably haven't been as tight as what they should have been. Certainly, from what I'm seeing, is that some people who now have targets didn't necessarily have targets historically, so they are being implemented. More strategic is really around making sure that our value proposition delivers the market expectations now, next and future, and very much Ian's new role and me being involved allows us, and not just us two, but other people in the organisation being more market facing, to make sure that we are offering a proposition that satisfies the changing market demands. And again, we've probably not been as good at that as we should have been. We're already introducing new propositions and products that Ian's identified from having market conversations, and they've been very well received. So the business hygiene, the tactical stuff is being worked on as we speak and being implemented. The strategic stuff is already being worked on, but there's a lot more to do in terms of identifying our business strategy to make sure that we stay relevant and appealing in what can only be described as a changing market.
So there's a couple of questions around need for cash and investment, capex and R&D. Our use of cash has stopped, and we're in a cash positive position now. Fundamentally, our business doesn't require upfront capital investment. It's very much just a people business. So generally, wins in managed services, there's a cash element up front because there's approximately a quarter of the contract is in upfront setup fees. There's a bit of cash flow requirement if consulting grows quicker, just because of the lag between being paid and paying employees. But our bringing money is very efficient and very tight. So generally, we don't need a cash investment in terms of as we grow, in that it self-funds. There's no significant capex, just routine sort of IT replacements. Our R&D spend, I would expect that to decline slowly. It's not going to drop off a cliff because we're still maintaining and developing enhancements to technologies. But you would expect that to reduce as we do more with partnering with other technology providers. There was a question about the cash or the cost reductions of £500,000 that we did earlier in the year. A part of that was some big salaries in sales and areas of sales that weren't really appropriate with our new sales model. Our new sales model doesn't require and rely on some big salaried salespeople that take clients through the whole process. So it's a more efficient process that involves internal teams and also involves delivery people getting involved in the sales process, and that's turned out to be a much more efficient way of doing things. But it meant some of the salespeople weren't required anymore, and then there was a range of other things that we identified that we didn't need. There was certain marketing spend that wasn't appropriate at the time, so that was all part of the work done to arrest any decline of cash, and that was all completed by the middle of the year. There's a question about percentage of workforce working in Bradford compared to those working remotely. I think it's about a third of the staff that are based in Bradford. We have some salespeople and consultants that work remotely, and then we've got some people obviously in Australia as well.
But what we do is that systematically we get every person in the organisation into the office on a quarterly basis. And we hold what's called development days, which is their opportunity to have an interactive session with the leadership team and to be part of co-creating some of our things that we want to do, some of our initiatives that we want to do going forward. So it's very important, again, for the business that whilst we've got a hybrid environment, and again, we're not unique in this, is making sure that our people feel included, engaged, and communicated with.
So I think there's a couple of other questions that we will answer in writing because some of them we need to just get some numbers around. For example, somebody's asking about how the shareholder base is made up. So we will address those, but we'll do those following publication of the recording. We do some written answers to those. So I think that's probably everything we can do. We can answer live unless there's anything else Matthew wants to say.
I think I'll if I can just wrap up from my perspective. I had a first-hand experience of working with ECSC, and one of my conversations with Ian was, I don't understand, given the service you delivered to me and the help you gave us in navigating our ransomware attack, I was struggling to understand why ECSC weren't bigger than what they are, and I suppose, maybe more successful. And that was definitely one of my conversations with Ian. You then look at some of the stats that we shared with you in terms of the size of the market, the growth of the market, the fact that boardrooms are talking about cybersecurity, yet half of businesses aren't doing anything about it. You wrap all those things together with some of the trusted advisor conversations that we're having with a new type of partner. For me, there's a combination of factors here that make this a very exciting business to be part of, which is hence why I joined. I only really do growth. That's my background. I enjoy and get a huge excitement out of delivering business growth, and I see a huge potential for ECSC in going on that journey. It's clear that it's not exploited its true potential. I'm not using that overused phrase of a sleeping giant, but that's sort of the sentiment I'm feeling. And as I say, certainly some conversations we're having, our proposition is well respected, well recognized. We just need to do more of it. And we're very much starting that journey now. So personally, I'm really excited to be part of this, and I'm really looking forward to exploiting the true potential of ECSC.
Okay. So thank you everybody for attending.
Ian,
I think that's
Yeah, Ian, Matthew, absolutely. Thank you very much indeed for both your presentation and for being so generous of your time there and addressing all of those questions that came in from investors this morning. And as you did kindly mention, we will give you back all the questions that were submitted today for you to review and then add any additional responses where it's appropriate to do so. Matthew, I was just going to ask you for those closing comments, but I think you just well delivered those. So if it's okay, I will now redirect those on the call to provide you with their feedback. So can I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. It's going to take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ECSC Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.